Welcome back to Ledger Prime. My name is Luke. Today we are going to be using Fibonacci analysis, exponential moving averages, and technical analysis to try find a stock to make a short sale for a swing trade. Here we go. Except, before we get going, this is not financial advice. This is for education and entertainment purposes only. Please trade according to your own risk tolerance. All right, so here we go. I have found the stock. Today we're going to be looking at Apple. I think Apple looks ripe for at least a short-term short sale to make money to the downside. So what I did first is I zoomed out to the 1-day chart and I found a low. And when I'm looking for lows on the chart, you want to pick something that even a kindergartner could find. Any kindergartner could say right here, yes, this is the low. So I'm going to draw Fibonacci from the low to the high, going left to right. And I already did this prior, but here's what I was looking for. Boom, right here. This bounced off the 382 retracement. Okay, so then what am I looking for? I'm just looking at a kind of a macro level here at the long-term chart. We bounced off this and we shot right back up. But what does it look like is happening? We see right here, we got wick, a wick, wick, right? That means there's some form of what seems like some kind of resistance to the upside. And we made a lower high. So this, at least right now, says the trend is down. It went down, it tried to get back up. Oh, didn't quite make it. And now the tide is turning. So this, I actually have this trade on right now. But let's go look at the 30-minute and see why I did it. So if we go to the 30, here's what I'm looking for. I've got the green line, which is the 8-day exponential moving average. The red is the 34-day exponential moving average. In order to be a candidate for a short, number one, I mean, you don't have to look at the daily and have made a lower high. That's a bonus because the daily chart is in our favor. But on the 30-minute chart, and that's what I'm trading off of, I want the 8, so the green, to be below the red, which is the 34. And right now it is. Also, what I want to happen is I need a prior swing low to have been breached. So if we say this right here, this cluster of all these wicks is a prior swing low, we can see it was breached right here. So if I just put my cursor here, you can see the faint gray line and you can see we did break the swing low. So then what I did is I want to have an edge. I want to find an entry point. So I'm going to take a Fibonacci retracement and I'm going to go from the high down to the low. And this is what I was watching. I was watching these Fibonacci levels to kind of see where we might come back. And I combined that with the MACD down here. So we hit that low. It looked like we wanted to make a little rebound. We got some green, 4 green bars on the MACD. And you can see it started to kind of stall right at the 382 retracement to the upside. At that point, I'm like, okay, I'm going short. So I shorted it on this candle right here. Okay, when it looked like it wasn't going to get above the 382. If it gets above the 382, I'm going to get out because this is a swing trade. I'm not married to it. But I went short and now it's looking like it's going in my favor. So my hope and what I'm looking for, I'm watching this MACD. Ideally, we see some bigger red candles and about the 3rd or 4th red candle on the MACD. See, this wants to cross over down to the downside. About the 3rd red candle on the MACD, we break this. I want to break 271 and go lower. So how much lower could we go? Here's what it's going to look like. Clear this. And here's how I'm going to find my target. So we're going to try a couple different ones. I'm going to go low to high. Okay, so my first target I'm looking for would be right here, 269. Then I'm looking at 266. And we can see if we go from low to high, nothing really overlaps. So that didn't give us much. So I'm just going to trade off of this right now. And like I said, right now it's looking good. Again, if we look at the 30, the key point into going short is number one, the daily needs to look like we're trading lower. Right? It needs to look like it's trending lower. And on the daily, I'm covering this again, we bounced off a 382. We made a lower high and got rejected. And looks like the trend is coming back down. And clear this drawing set off. So now this is the swing we're working with. Okay. So I go low to high. So the target right here, 266. That would be the, if we can break this low of 271, we're looking to hit a 266 to the short side and then 262. And if it keeps going, I mean, this low could be in play. Like, are we going to make, if we're making lower highs and lower lows, we could be looking at 233 or 220 even. But we'll see. We'll see how it pans out. At any sign, any time that we break this high of 275, the trade is over because we broke a swing high, and that means the short is over. The 8 will probably be above the 34, and we would need to wait if we want to go short until the 8's below the 34 and we break a swing low. So in this case, guys, I'm going short on Apple. I'm looking for a break at 271 all the way down to 266, and then we'll reassess from there. This is Luke with Ledger Prime. Again, this is not financial advice. This is for education and entertainment purposes only. Please trade according to your own risk tolerance and risk profile. Till the next one.